Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room streaming in YouTube. We have a real important day today with the FOMC meeting later, deciding on what to do with interest rates, and we'll hear Chairman Powell's comments on pretty much what the monetary policies are going to be moving forward, if there are going to be any changes or not with regards to interest rates. The digital currencies are up this morning, digital assets, and gold is a bit sloppy here, and actually the strongest of the metals is the silver market. So we'll take a look here in a few minutes. We're going to come right back here and see what the numbers are for today. Talk to you soon. Welcome back. Let's take a look here at pretty much just a general idea here. The dollar index here is bullish, neutral to bullish, with a target of about 92.77, and the gold market is in a bearish to neutral position with the buy one level at about 1797. The silver market is neutral to bearish. There are no trades pretty much in gold and silver, as the market is trading below the mean with a bearish price momentum, but a close about 24.85. $24.85 will revert the bearish trend momentum to neutral, and then another close above it will turn it to a bullish price momentum. Copper, it's down about 1.25%, down about 5 cents. So it's into the buy area. It's into the buy mode, and we are waiting for a confirmation of the market trading about 450 to activate a buy trigger. So be alert on copper. Coin is up about 369 here, sharply opening higher here this morning. 238.70 up about 362. And it's still a little bit too early to tell here what the daily charts are indicating for us. On Coinbase, we'll come back to that a little later. GDLC is a terrific asset that we are trading as well. We recommend it here in our private trading room a while back, and we did take a little bit of profit yesterday. We went back in, and now the trend is bullish, neutral to bullish, with a target of about 29 once again. 29 to 30 are the weekly targets, and if we do get those prices, the sooner the better. We're going to probably lock in some more profits here. We're not liquidating 100% of our position. We're trading about 50% in and out and keeping about 50%. So as the market pretty much continues to confirm the path of least resistance for digital currencies, for Bitcoin, are on the way up. Bitcoin itself in the futures is also pretty flat here today, slightly down, but we got the derivatives to be a little more active. We're going to have a really choppy day today, based on pretty much what the market feels that the Feds are going to do here with regards to interest rates. So there's not really that much that we can do here today except to allow for the market to react, you might say, to the possibility of what it expects is that interest rates are on the way up, or are going to be going up, or the Feds are going to announce some kind of tapering, which essentially is a signal that interest rates are going to go back up here. My feeling is that the Feds are going to do nothing, and they're going to tone down actually the rhetoric of tapering. If you remember the last time, or the last meeting that we had, the markets reacted tremendously bearish on the news that they are going to be tapering a lot sooner than later. And we saw a massive correction in precious metals. I think it caught the market by surprise, and unless there is something very definite announced with regards to monetary policy, interest rates, I believe the markets are going to regain all of that correction loss that we saw here and regain to make new highs. I think there's a very, very high probability that we could reinflate once again commodities. We're getting a lot of pressure from weather. We're getting a lot of pressure from logistics, transportation, and the demand that we have seems to be pretty impressive with regards to moving back into the economy. But we're looking at a situation that is a combination of different black swans, you might say, that are affecting the real price discovery. And commodity prices are on the way up. Coffee has doubled. I don't have to point out to you where grains are. But in general, we're seeing a pretty strong reversion to an inflationary cycle. Now, Chairman Powell, the last time, was able to talk the market down. It caught the market by surprise. I think what it did is it basically eliminated a lot of speculation out of the market. And I think it was a perfect buying opportunity into that correction for those traders that are looking to build and add to the position. As I talk to my traders that are trading in the gold market here, I sense a great deal of frustration, including myself, in terms of the market not reacting as one expects when fundamentally things support a price movement or a reflection in the price, just based upon the supply and demand that's going on, not to mention the fundamentals that are building that are just explosive for assets. In talking about gold or Bitcoin, for example, what appears to be happening here, obviously, is that the money has gone into digital assets that are decentralized assets that are part of this blockchain. technology. And pretty much by being decentralized, they have no control. The government has no control. And, you know, when we take a look at the amount of money that seems to be flowing into digital assets and Bitcoin becoming pretty prominent in becoming a highly competitive asset against gold, which in essence means that it is a competition against gold to establish another potentially asset that would be potentially become the world's reserve currency. In replacing the US dollar at some point. I'm not sure if it's going to happen in a week or a month or a year. You know, we're talking about changing the fundamental root basis of the US dollar for the last 100 years at least. But it appears that this new asset base is gaining momentum. A lot of money is going into that sector, and essentially it's a consequence of what the market expects, is that as the government continues to print more money, the dollar continues to debase. The dollar continues to lose its integrity, its value. And obviously, what we have seen here as a consequence of the awareness that, you know, since last March, the Feds decided to open up the printing presses, what it meant for the US dollar. And so, you know, if the US dollar drops 30%, or if they print 30% against the US dollar, it's being reflected in assets like real estate. It's being reflected in assets like, you know, the stock market. It's being reflected in Rolexes that have quadrupled in value over the last year. The last time I priced the Rolex was about $2,500 for an Avatar edition. Right now, I think it's selling for about $18,000. This is what's happening when people realize that the currency is being debased. And if the currency is being debased, unless you are protected on the other side of the fiat currency, in this case, the US dollar, your assets are going to decline as well in intrinsic value. So as they print more money, it chips away more and more at the purchasing power of the US dollar. I mean, this is part of what most people confuse to be inflation. You know, what we're talking about is not price inflation. What we're talking about is monetary inflation of the underlying asset, basically of a currency that you use to buy and sell stocks or any other investments in US dollars. So the system is definitely going through a reset. And I think where the money in the market seems to be demanding is that we establish a solid market of confidence and acceptance with Bitcoin. And if Bitcoin becomes priced in crude oil, I think it's going to be the beginning of the acceptance of Bitcoin as the new world's reserve currency, replacing the US petrodollar. So I think our leaders realize the challenge that they have in order to maintain the integrity of the US dollar. They can't control blockchain. They can't control Bitcoin and the growth, the tremendous growth that it's experiencing, except to limit, to regulate, which in a sense, regulation itself is confirmation that the market is real and there is demand for that market. And as long as there is demand for a market, the government has to create rules, regulations, and is forced basically to implement and legitimize that market. And of course, we are beginning to see possibly institutions embracing more and more outside of Elon Musk and Tesla. Other companies, I believe, are considering seriously to become part of this digital world that we're moving into, this digital economy that we're moving into, which is really the new economy. As we begin to see the old economy dealing with record debt, and they continue to print and print and print. Which essentially is debasing the currency and bringing the currency down to a zero value. And I believe that's the whole idea. If they can devalue the currency, the old debt goes along with it. And if the government can reestablish a new digital dollar, that would be replacing the old dollar and will continue to, you might say, fight for maintaining its world reserve as a currency. So, we seem to be dealing with a competition of digital currencies and fiat currencies. And when you take a look at the risk that we're running in fiat currencies, there is absolutely nothing to protect the intrinsic value. As they continue to print money, there's nothing on the other side like gold or silver or any other precious metal asset that will at least maintain that purchasing power. And so it's really, I think, the end of fiat currencies, or we're moving into a change in paradigm, basically, on how the world, the investment world, deals or trades currencies. So there's a lot of, I believe, value that's being transferred in the process of being transferred to Bitcoin. As an asset, a tradable asset, it's a terrific tradable asset. It has all the elements that you need to trade. It has volatility. It has liquidity. It's the most, you might say, talked about area. It's got all of the elements for you as a trader to get involved with the market. Volatility is a trader's dream come true. Putting away all your philosophies politically or otherwise, I think you're looking at a market that is giving an opportunity to be able to at least hedge again on the continuing loss in purchasing power of the US dollar. It really is a protective way, which is really what I'm looking for as a trader. How do I protect the $1 million that I made last year, even though I'm down this year, based on just the action in the gold market that we've seen, since last August. It's been a consolidation phase. So a lot of these assets have obviously declined in value. Down on what we saw was 61.8% Fibonacci retracement that brought us down to about 1673 in that vicinity. So the reason why I'm trading this assets obviously is because we're trading money. I believe gold and silver are real assets, real money, and I think Bitcoin is a virtual asset that potentially has all the elements to be a competitor. We're competitive with the U.S. dollar as the world's reserve currency. So it's going to be interesting, and it truly is exciting to see the transformation of in the reset, you might say, that's taken place in the monetary system. So the one thing I want to point out to you, if you're focusing your attention on trading these instruments, that the volatility that they bring is by far anything you can't compare to anything that we have seen in the past. And I think it's going to increase as demand enters the market, and as people begin to see that there are ways that they can get involved with it. You have a lot of the major banking institutions, Morgan Stanley. There's rumors about Amazon getting involved. I think what we will see more and more is the acceptance of Bitcoin, potentially as a form of exchange. Let's just continue to watch the market here as we pretty much have a pretty quiet day here waiting for the FOMC meeting decision on interest rates. The strongest market that we have in metals today is silver against gold. So we've been seeing that rotation for the last week or so. If we get the silver up about 24.85, it's going to negate this bearish trend momentum and activate a bullish price momentum, activating the target of 25.18, 25.19. The average price for gold for today is 1803. And we're in the middle of the buy one level in the average price. And so either we're going to come down to 1797 and activate a buy trigger, or we're going to go through 1803, close above 1803, and activate a bullish price momentum, activating the 1809 level. Coin is turning around, up about 520, up to 22.10% roughly. and it's looking for a target on the sell one level here. $242 to 249 are the targets. I think most of the market here is focused on the minutes today, as I think it's important to see how they are interpreting basically the anomaly that we have in the 10-year note by the interest coming down into that 120, 118 area. And the bond market pretty much indicating that it's the opposite of what the sentiment seems to indicate. What the bond market, what the 10-year notes are indicating is the possibility that we are going to be running into some kind of a slowdown in the economy as we move into the third and the fourth quarter of this year. So let's continue to maintain our long core position and be prepared that if we do get the chance to buy into this market on any corrections into that 1796, 1790 area, it is a high probability that a reversion may unfold from these levels. Buy corrections in precious metals, buy corrections